Good morning, good evening, good day. What's good day in Dutch?
Goeiedag.
Goeiedag.
Wherever you are.
Wherever you are. I thought you were going to say ravioli then. Well, thank you for joining us on the Two Tokens podcast. Delighted to be back here in, well, not quite so sunny Amsterdam, but here we are in May. This is the fourth or fifth year?
Fifth year.
Fifth year. Wow, how time flies when you're enjoying yourself. And welcome to Erich and Alex. Very much founders of Two Tokens. I know you've been doing a lot of work, which we'll get into. But before we do, last time I sat down was just before Christmas, and we had a couple of predictions for 2025. So, Alex, if I can ask you to kick off, what did you think we would see happening, mainly in the tokenization space? What were your thoughts and ideas?
Yeah, I was maybe a little bit naive, but it's happening. I said massive adoption by institutions of adoption. Real world assets, all that type of stuff. But
so big institutions tokenizing funds, bonds, things like
that. Yeah.
Okay. Well, you didn't quite get that right, did you?
No, I didn't.
Not yet.
Not yet. I was a little bit too eager.
But there's a lot of discussion about it, and every conference you go to, there's at least a couple of tracks on real world assets. So things are happening, but we still have to see it in the market. Yeah.
Okay, and Erich, what were you had a couple of predictions. What was your prediction?
My prediction was that Bitcoin was going to jump when Trump was in office, and it did, and we're not nearly there because there's a lot of turmoil in the US. The inflation will kick off, and so it's going to go much higher than it has done now. And what I also think is that. What will be the next thing is that all these experiments we did on Ethereum, tokenization on Ethereum, will find its way to the layer 2s on Bitcoin as well. So we have Bitcoin really doing applications in the next year or so. Yeah. And that's also so the things that Alex was talking about, real world asset tokenization, will happen on Bitcoin as well. And the advantage there is there's a lot of liquidity on Bitcoin. There's a lot of money on Bitcoin.
Okay, but. As you've heard many times, we need to keep it in perspective. The crypto market is still 2.5-3 trillion on a good day. But if we look at the things that you're talking about, Alex, which is equities, bonds, commodities, real estate, derivatives, that's 2.2 quadrillion.
Yeah.
And so one of my frustrations, I think after I saw you, I was asked to go and talk at the House of Lords about digital assets and how would digital assets going to impact the UK economy and then the wider economy. And the opening question was, Jonny, can you tell us what is going to be the impact of Bitcoin on the UK economy? And I just put my head in my hands and said, no, we're not here to talk about crypto.
No.
I suspect, his lordship was rather miffed that he hadn't bought Bitcoin at $1 when I spoke to him. It was about $100,000 at a time. So I think it's really important. Today, we're not going to talk too much about the crypto. And I know it's a subject we've spoken many times about, Alex, and it's something that you and I share, certainly, that there's much, much more to digital assets and tokenization. And I know you've got some news which we're going to come on to later on, talking about the work that Two Tokens doing in particular. But one of the things which I spoke about, and it seems to be increasingly happening, and that is when it comes to payments. Now, some interesting statistics from McKinsey where they were talking about the global amount of revenue that's generated from payments is something in excess of $2.2 trillion a year. That's how much money's been made. And here we are in Amsterdam. And Amsterdam, I believe, is the third biggest fintech sector. So you've got New York, London, Amsterdam. And the reason for all these Erich's saying not so sure about that. He's probably thinking, Berlin is probably
no. I'm thinking Paris or Frankfurt, but not, if you call it fintech, but not Amsterdam as third. But I'm not sure about that. But I think, especially if you look at crypto tokenization and what's happening in Paris, they are so much more advanced than we are here in the Netherlands. It's still a small community. Things are happening here. A lot of research is happening. We have great projects here, but the big adoption is, and also the backing by governments and institutions is in Paris is much more than it's here.
I agree, but fintech is a lot more than tokenization, right?
True,
So,
true,
so
yeah.
if you look at all the payment companies that came from here, I think we did rather well, but that's all in the past. Yeah, I agree with that.
Yeah.
And you presented at Holland Fintech not too long ago.
True.
So, but my question is, what are stablecoins going to be doing to the payment sector? If you see how USDC, USDT, are picking up steam, seems to me that the dollar is prevalent, and where's the euro going and the other currencies? So.
Well, it's interesting. If you talk about stable coins, and I put stable coins into that bracket of programmable payments. So if you look at programmability using algorithms and bots, it accounts for about 65-70% of trading on stock markets. And at the moment, there's very little ability to have true programmability on payments. There's normally an individual has to get involved. But now we're seeing programmability on payments coming in. So just up the road, Rotterdam, a ship arrives Sunday morning, and a little IoT device, an Internet of Things device, sits within the ship. And as that ship docks, then various payments can be triggered. You can pay the shipping company because they've delivered your goods. You can pay the customs and excise because actually now duty is paid. You can pay the harbour fees. Now all of those can be automated and triggered to happen at 2 o'clock in the morning on a Sunday.
Yeah,
you haven't got to wait, and you haven't got to rely on human intervention. And I think we're going to see more and more programmability, whether it's through stable coins, central bank digital currencies, tokenized deposits, or even more programmable bank accounts.
You see stablecoins evolving in something that is backed by a currency like the dollar, and we don't see the adoption from the euro stablecoin yet in Europe. I think with everything that's happening in the geopolitical world at this very moment, it's likely that once the dollar is losing value, that euro will pick up a bit, but doesn't go as fast as well. But that's not the only thing. It could be backed by anything, right? Stablecoin is what you perceive is for you an important stable value, whether that's gold, whether that's real estate, or whether it's a basket of goods. That could be anything actually, and so stablecoins will arise, and I know a lot of projects that are trying to do that, and they will pick up in the next few months, a year perhaps.
Well, Erich, right, and there's so the fifth biggest stable coin is USDE from Athena Labs, and that's just under $6 billion in size, and it tracks the US dollar, so that's its investment objective. Its investment strategy, though, is a short-term delta neutral hedging strategy. It sounds more like some sort of fancy hedge fund, selling volatility on a basket of cryptos.
It's interesting how this is going to pan out. Huh? So Tether, of course, retreated from Europe after MiCA and everything. We have our own Quantos stablecoin.
Who's backed by Tether?
Who's backed by Tether? So that's going to be interesting to see.
Societe Generale have got the URL. So but you're right, it hasn't grown that much. But no. I would suggest that's because if you look at FX flows, so the foreign exchange flows are about $7 trillion a day. 65% ish is US dollars.
But it also has to do with MiCA, where from a stablecoin it's required to have a large portion of your money just on a bank account.
Yes.
And money on a bank account usually doesn't make that much money.
Yep.
And the banks don't want that much money on bank accounts, and we don't want a Silicon Valley bank run here in Europe. So something has to be changed there as well to make it more, I think, affordable to create a stablecoin and make money on the stablecoin as well, and make sure that these processes are going to be frictionless. And so there we need to do something on the regulation part.
You done a very big presentation, and part of your masterclass is on the future of payments. So I'm sure you have some thoughts about that. Where that's going?
Well, I think, Alex, what's happening is we're going from a lot of the crypto community were using stable coins as a form of payment, and people are now beginning to realize that you can use digital money and program it and automate a lot of the process. So I gave you the example of the shipping company. But let's look at something which many of the listeners will be doing at some stage, like buying a flat or a house. Now, at the moment, let's just say you're the lawyer and Erich is the guy I want to buy my flat from. At the moment, I have to give my deposit, my fees to you. And then as and when you get the title deeds from Erich's lawyer, so that's another party involved, then the title comes to you, and then you then make sure the title's in my name. So you then take your fees, you pay any stamp duties or any property taxes, you pay the deposit. It's a really cumbersome process, but the risk is I'm giving you my money. Now, certainly in the UK, some of the highest professional indemnity insurance is for lawyers because they've got access to title deeds, they've got access to cash. Whereas there's no reason why I can't keep hold of all of my monies. And once a third party has said, the title deeds have now passed to your name, Jonny, from Erich, then automatically I can pay you, I can pay any property taxes, and I pay the deposit for the house.
It sounds very simple, but the thing is that these processes are not mapped out in detail. Yep. Everybody is doing it on their own way within the legislation, and the legislation sometimes requires things that are not easy to program, like wet signatures, like stuff like that. That money should be somewhere, and before it's transferred to somebody else.
I agree. I think in order for us to get massive adoption, wouldn't it be nice if the central banks, or one central bank, was saying, we're now going to tokenize, debt paper, bond,
And that's big. There's been a lot of discussion in Holland, obviously. I know in the UK there's some announcements last week. They want to create a digital guild, and debt instruments are the ideal. If you remember in the last masterclass, we had Elliot Hentoff from State Street, head of macroeconomic research at State Street, and they're the second biggest custodian of real assets in the world. And they're saying, well, they can see the majority of the debt markets being tokenized. If you think about it, you raise a 100 million euro debt instrument, you've got, and it's a 10-year bond, so you've got 20 payments to make, or 21, because you do 20 lots of dividends, one every 6 months, and then at the end of the time period, you've got to repay the 100 million. So it's a very process-driven, that's what's going to happen. So a lot of that can be coded, it can be programmed, and that's what we're beginning to see. I know ABN AMRO have been doing a lot of work on this. In the past, we've spoken to Martin, who's very much involved in 2 tokens, and we're going to see more and more issuance of debt, I believe. We're going to see more and more money market funds being created. That's then going to create a need for the coupons on interest.
Yes, but
that's going to be where I think we're going to see digital money, things like stablecoins, which will be used. And if you see lots of European bonds, European money market funds, they're going to need a European way of actually paying that. So it'll start being a payment mechanism as opposed to a shelter from turbulent times in the crypto market.
These are the examples you give. Those are pretty simple processes, right?
Yep.
It's pretty straightforward. But the moment you start talking about synthetics, derivatives and stuff like that, it's so complicated, nobody understands what's happening.
In fact, 2 tokens was in the European regulatory sandbox, cohort 1, cohort 2, which finished just now. We are now in cohort 3, the only organization in Europe to have been selected for 3 cohorts. And we talk a lot to the regulators, central banks, and the definition of money, we think it's easy. There's many definitions of money, right? E-money, stablecoins, USDC, what have you. And there we learned that there's still a lot of questions unanswered. So I think that is also the reason why we don't see that massive adoption yet. We're still learning a lot.
But Alex, I think that definition of money is a very interesting one because, as you know, we do a lot of speaking in all parts of the, whether it's in Asia or Americas or Europe in the last year, and people get really confused and say, well, why do we need digital money? I've already got it. I've got my phone here and I can just transfer money easily. What people forget is that in most jurisdictions you have an E for Echo money license. It's not D for Delta. And what's happening is e-money is typically created by commercial banks. So you're reliant that the money you have in the bank will be safe. And we've seen examples of banks in all sorts of jurisdictions in the last 12 months go bust. Whereas digital money is backed by something. And as Erich said earlier, that something might be zeros and dots with a Bitcoin. It might be real estate. It might be gold. Or it might be actual cash held at a bank.
True.
And if the bank goes bust, it doesn't matter. They've still got the cash there because they're not allowed to lend against it. So going back to USDE, yes, it's tracking the US dollar. Okay, a lot of people want that. And it's paying 20% yield. So a lot of the gullible will go into that and say, I can get 20% yield. They haven't looked what's under the hood They haven't looked at what's going on to create that 20%. So there will be some people who will be very disappointed if they lose its peg because that hedging strategy doesn't work, and the regulators won't like that. But there is a big difference between e-money and d-money, which even the banks don't really understand the difference. But d-money in many cases is safer than e-money.
Yeah, it's allocated money. It's there. You cannot use it for anything else. And the other side, because you cannot use it for anything else, it doesn't
generate the sort of returns that perhaps you might want.
Exactly.
But how is this going to help the whole tokenization industry?
It's an efficiency thing, and nothing more than that. It's making the money that's made in the financial industry. You mentioned, I forgot the number, but you mentioned before
2.2 trillion.
Yeah, exactly. That's a lot of people working there. That's a lot of systems working there.
Let me give a little example. So there's a very well-known online retailer that most of us have probably used. And there's also a manufacturer of, in the UK we call training shoes, trainers. In America they call them sneakers. What do you call them here in Holland?
Sneakers. Yeah.
Sneakers. Flipping Americans get a word. Never mind. The king will have to have a word with Mr. Trump about that. And they said, okay, there was, on this consignment, there was $186 million worth of payments from when you click to buy the trainers or sneakers, all the way through to a Bangladeshi lace manufacturer, the people use laces to do your shoes. So there are lots of little payments all the way through, and they added them all up. It was 186 million. They said, well, how much would we have saved if we used D-money, not E-money? And any idea how much? Out of 186 million, what do you reckon?
No.
At least half, but I think much more.
It wasn't quite that. It was 42 million.
Okay. Really?
It's a massive saving. That's 30-odd% of. So if that's true, now to back that up, you've got the Bank of International Settlements, who is if you like, the organisation for the central banks that they look after. Bank of International Settlement claim that just a 10% adoption of a digital currency will result in a 1% increase in GDP growth over 2 years. So if this is true, you're going to see governments, you're going to see companies moving into digital payment. Now, I'm not for one moment suggesting that you won't be able to use cash and you won't have e-money, but I think you'll have an alternative.
Where does the 1% go? Who is gaining on this mostly? The
SMEs. SMEs, because they'll be able to receive money faster, they'll be more productive, and they'll have a high velocity of money, which leads to better economic growth.
That's not what I'm meaning. So we have these I don't know, thousands, tens of thousands, million people in between working on these transactions. Here in the Western economies, we are service economies. We probably will see a lot of jobs gone, but the people in lesser developed countries, they see even more people leaving, and so you have a social aspect there as well. Do we all want that? What's the effect of that?
Well, I think we're now straying into sort of more the digitization and AI, because I think AI is going to have a massive impact, and automation, because a lot of the physical jobs, even caring for people, arguably is going to be replaced by sort of robots and humanoids, assuming we can get enough rare earth metals to actually make these things in the first place. But no, I agree. It is a very good question. It's actually a topic which we've covered in Digital Bytes this very week, saying, is this something we really want to see as a society? Do we want to actually depersonalize everything and digitize everything? And I'm not saying that I'm an advocate that it'll go 100%, but I am an advocate that you have choice. Because if you look, I'm here in Holland today, I will use a challenger bank, a fintech company when I make payments here. Mm-hmm. I will not use my UK bank account. Why? Because it's 10% cheaper.
I remember when we started 2019, one of the payment companies here said, Alex, we've been doing tokenization for 20 years in payments, right? Mm. But tokenization is so much more than just payments, transferring value. Right?
So this is one of the things I really want to ask you. How does tokenization help companies? You've had a lot of very successful projects.
Yeah.
Why do we need to bother with tokenization as a company?
So personally, I believe, of course, we can tokenize shares, we can tokenize bonds. That's great. You can still do them analog, so no real need to tokenize that unless you want to show more liquidity, effectiveness, all that. But
transparency.
If you go to real digital infrastructure like electricity, there's no way you're going to trade a kilowatt hour analog, right? You need to do that digitally. So the added value of a token there is so much more there. The only thing is we don't want to call it a token because somehow people think that tokens are crypto. So we call it digital energy. So all these different industries, have a different need for tokenization. I could think of there's many companies out there who have debt capital on their balance sheet, and would want to create liquidity from that capital. You
could be anything, right?
Yeah,
It could be
anything.
It could be their stock in the warehouse that they invested in and want to borrow against, for instance. And the next thing you need is, of course, these platforms where you trade it. And then people have to understand what the value of a certain token is, or what the token represents exactly, what the value of it, what it represents. And that's the difficult part. So you need oracles for that, but also you need the platforms. And we work with companies like Defactor and that create these platforms, Swarm, that creates platforms like that.
There are many platforms.
There's many platforms.
Erich, I think it's a really good point, because if you look at the state of the IPO market, initial public offering market, i.e. when you launch a company on the stock market and everyone hopes immediately it rises up in value, the reality is that the IPO market has been on quite a steep fall, and there's more and more companies coming off of being publicly quoted, and there's more and more companies that are private. So you've seen an explosion in the private debt and the private company market, which historically is only been the preserve of the very, very wealthy. You've got to have a minimum of.
But here's the point, right? So yes,
but hang on a second, because I think this is really important. What we are now seeing is a whole new range of digital platforms.
Yes.
Where these tokenized, you've got stock in your warehouse and you want to tokenize it, and you perhaps want to
have
some
point.
sort of secondary marketplace, or it might be debt, or it might be data. We're working with a company that's got a huge amount of data, and so you've got this pool of data which other industries would like to reference against. Why don't you sell a token of that data, and it expires after 3 weeks or 3 months, and you can do these things with tokenization you can't do. This represents a huge opportunity. The London Stock Exchange will be launching a digital platform later this year. You've got 21 in Germany. Fantastic, some of the stuff they're doing. Yeah. Swarm, you mentioned, they're trading stock 24/7. So we're going to see a number of these platforms, because you'll need a secondary marketplace.
A secondary marketplace, yes, but you also need liquidity, right? So what you see is funds and also liquidity pools, which are something different again, but then on the blockchain. Investing in that, so that you as a person would probably do that indirectly, not directly on a platform like Swarm or Defactor, but go via a liquidity pool or via a fund to invest in that, so that part of the risk is managed by somebody else. And it's impossible for an individual to go into every item to see what exactly it is, what's behind it, what the risk of that.
Fantastic use case for AI. And you're seeing AI and blockchain working together.
Certainly.
More and more. But what I'm interested, so if I can bring it back to two tokens, so since 2019, 18, you've got a few changes you've made. So can you explain, Alex, two tokens is no longer just one entity. You're looking to actually do two things with two tokens now.
Well, I think two tokens is an ecosystem play, so we are more than one entity, always have been, but we have always been organized as an entity that is there for the public interest, working in use cases, working groups that are real, businesses like the energy token or the bill of lading token that are then implemented. And all the results from those use cases, I think we're at use case number 13, working group number 13 now, those results are shared, either in a podcast like this or white papers. We even...
You've even done a book.
We even did a book, right? So
hang on, let's show them the book. This is the power of Nanny.
Power of the many.
Oh, many. Sorry, not Nanny.
But to be honest, I don't know who reads books anymore. But
it's an example that is, I think it's handy to have the book.
Exactly.
It shows that what we've done. It's about 180 pages.
Yeah.
Of describing how you tokenize energy, how you trade it, how you share it, because that's different things. We won't go into this podcast, but and there's another podcast that goes into that as well. But that gives you an example, gives you something to develop on, and that's basically what we do, right? We disseminate everything that we do in that public interest in white papers, but also and then you might want to do something with it, and we help you there as well. We have these masterclasses within Two Tokens that you can learn what tokenization can bring to your value chain, to your company, to the business you work with, and then if you want to implement it, we help you again and start up the project and manage the product for you and make sure that you have the right partners, because that's what it is. We are an ecosystem, like Alex says. We know almost everybody in the market here in the Netherlands, and a lot of
MiCA territory.
And well, in the Netherlands we know I think almost everybody, and in Europe many, and not all, but and that's how we can set it up for you. So make sure that tokenization can be implemented in an efficient way, in a fast way, with all the requirements. You already mentioned MiCA that are applicable, but also GDPR. If we talk about transparency and privacy issues, we can take it up and do that for you as a company.
Okay, so just for absolute clarity, you got the Two Tokens organization, and there are really two distinct parts to this. There's the workshops, the educational, the
public part,
the master classes, where it's very much explaining, educating the process, the pros and the cons, and we're gathered here today. Again, we do this every 6 months, where we're actually going to bring in real examples of companies actually doing stuff and the lessons they've learned from tokenization. And those master classes, you can get more information from on the Two Tokens website. And then for those that then want to almost like they've learned the lessons, how do I implement it? And you've the three areas that I think you're working is finance, art, and energy. They're the three.
True.
At the moment. They're the three things which you're very focused on. And how do you use tokenization in those three? They're quite different categories there. Finance and energy and art.
And sometimes in art and finance they come together, right? Because you want to tokenize something to extract the value from that specific object and use the money you can raise to expand your collection or whatever you want to do with it. But and then these two come together, and then you have all these opportunities that Finternet or the financial sector brings to you, from lending and borrowing to just issuing tokenized
I would
bonds or
argue
shares.
the same goes for energy.
Yeah, true.
Yeah, and 20 years ago, IT was something that was seen as a
separate
occupation, and now IT is in everything.
Embedded into everything.
Same goes for DeFi, right? So, if you look at the third cohort that we're in, it's with the banks about micropayments and energy. We're going to see that in many use cases. But the point is that companies are coming to us. So can you help us establish ourselves, with an entity? How do we do a token? We would like, many times people think it's just to raise capital, right? Either by debt or by
Which it can be, but it doesn't have to be.
It can be,
Yeah.
So.
Okay, so how do they get more information? How do they contact Two Tokens?
Same as always.
twotokens.org. Go to the website and you'll find all the information you need. And if the information is not there, send us an email and we'll reach out to you.
Brilliant. Okay, well, thank you both for joining us today. I know we've got a masterclass which is starting very soon, but thank you for listening to the podcast. And as I say, if you'd like more information, best place to go to twotokens.org, and certainly that we can get you more details about some of the work we're doing and how we might be able to help you. Or you might just want to come to one of the masterclasses and listen as the process and the legal and the regulatory and the taxation, and then see the actual case studies from all over the world, and that's what we showcase at the masterclasses.
Yes, today is the final session of the masterclass of the first half of the year. We start the masterclass again in September, I think, is the next session starts. And that's a 5 days, 5 times 4 hours that we go deep dive into tokenization and everything.
And we have symposiums, expert sessions. The one in June should be interesting, with 1 year MiCA looking back with the banks. So,
and now we're in there. Just one new thing. We You see three old men here at the podcast.
Well, talk for yourself.
But we are now together with Lisanne Drost developing something for women in crypto as well, and we have a lunch scheduled on the 23rd of May.
Should be interesting. Yeah, brilliant.
Fantastic. Well, thank you for listening. Thanks for joining me, and look forward to today, and then look forward to seeing you again at Christmas time.
Okay, great. Thank you, Jonny.
That was it for today's podcast. Thank you for listening in, and please subscribe so you don't miss out on our upcoming episodes. If you want to get in touch with us, you can find our contact details at www.twotokens.org.